Good evening, all. Ira Epstein with your Spider ETF wrap-up, and this wrap-up is for Wednesday evening, and this is the 27th of July, 2022. Interesting day. The Fed went with the 75 basis point hike, but it was more about the Fed conference, the news conference, than anything else. Fed Chair Powell doesn't think we're in a recession. He sounded to me like he talked to the Biden people, and they bought into the argument that, hey, in order to have a real recession, regardless of if tomorrow's another quarter of losses, which he didn't know, he says, and we certainly don't know, but if that's the case, you still have too strong of an employment market for that to be the case. And as an academic, he is completely correct. It's 2 quarters in a row of losses and about a half a point bump in unemployment. That's the traditional academic point of view. We don't have that. Agreed. Practical point of view, who doesn't think we're in a recession that's running a business? Who's not seeing some backlog? Not every company's like that. I have a buddy, a good one, that runs a container business. Now I'm talking chemical containers where they blow mold things and so on. Business is doing phenomenal. I can't believe it. My other friend, he's a meat purveyor, ribs and other meats. Unbelievable, off the chart business. Big margins, they're doing great. Unbelievable. It's the guy on the street you have to worry about. The well-heeled are doing well. Did anybody look at LVMH today? Stellar performance, even with China being a monster drag on them. So the people with money are buying. Those without are feeling tremendous pressures, and they're trying to make ends meet. And that's most people, right? Not every one of us are going in and buying Birkin bags and whatever else and shoes for $1,500 and $2,000 for our wives. There's a number that are, but obviously because of LVMH, but there's plenty of us that, we don't need to do that. All right. So I didn't quite buy the Fed into what the Fed chair was saying. His job's to sell us. His job is to make us feel good and rosy, and he did. His job at certain times is to scare us. He didn't want to scare us. So what he said is, yes, the Fed comes September. They have no preset idea of what they're going to do with interest rates. They're going to be fully data dependent, and they refuse to offer forward guidance due to the environment that they don't have control over, being, supply chain issues, which are still prevalent, along with, if we take a look at it, the Ukraine war. Speaking of supply chain, did you look at the recent durable goods orders that just came out? Where was the strength? Autos and trucks. So somebody's getting chips to go into the lots, put the chips in of cars and trucks already built, and deliver them. And there's a huge backlog. Remember, none of us got new cars, most of us, because we couldn't get what we wanted. You certainly couldn't order them unless you took what was on the lot over a 2-year period. So, interesting. So there are certain things that are going on through there. Today, the Senate passed the chip bill. I like that. It goes to the House tomorrow. So let me think. Nancy Pelosi's husband bought $5 million worth of chip stock going into this vote, and she's going to tell the House to vote no. Okay, so let's go to the Meta. When I come to Meta, down, and today they had bad news. Their advertising is down. Now, how much of this is priced into the stock? Because this is still a fabulous company becomes the big question. I read reports where people are coming out and saying, you want to start buying these things in the 150s for the long-term hold. You know, I think it is a great company and certainly has a lot of earning power. However, nothing on that chart is screaming at me to do that. The trend is up in the swing line. You got higher lows, higher highs. You're fighting your battle at the neutral number, the 18-day average, and you've been there since the beginning of July. The resistance is a combination of the 18-day average, because you're back to it from after being under it. The next resistance, 182.12, and momentum's turning up. So I get what they're saying. The people that are buying it are probably going to buy it at 168.19, thereabouts. You know, I don't know what the aftermarket did today, so in all fairness, don't hold me to that. They'll put a stop, I think, under today's low. That I can see is their logic. AMC, you had a big, huge break. It's probably going to go back and fight in the 18-day average in the 100, but there's nothing friendly on the chart. Nothing super bearish either. It doesn't hold rallies. Apple. Well, we're going to get Apple tomorrow numbers. Why would you go into them? Let somebody else own it going into it. Disney. I think their numbers are going to be good, so we look at that. Got a lot of earnings yet to come. In XLF, the financial sector liked what the Fed chair said. It had the whole day after he spoke to break, and it didn't. They're probably going on up to the upper Bollinger Band to fight the battle there. This market gave it a thumbs up. A thumbs down happens if you get under 32.42. That's how I'll view the chart. XLI, embedded readings, going to the upper band. Profit taking can set in, but it's still a buy from the looks of it as I see it. The Fed just gave a pump to the upside in the market. In the semiconductor, surprised it didn't rally a bit more, but I see resistance between the 100-day average, the upper Bollinger Band. Just hanging around here, not doing an awful lot one way or the other. Still sorry about this coughing. It's the remnants of the COVID, and they told me it is definitely 25% of what it was, but when I do prolonged talking, it makes me cough. During the day, if I'm not speaking, I'm fine. Higher lows, higher highs, fighting a battle between the 100 and the upper Bollinger Band and overbought. Now, I think the big money guys on this are taking money off the table right now. There was talk by the Fed about homes and so on too, and that's the issue. They're pricing people out of new homes, but the home builders have ways to get you into stuff that's existing, discounts, builder financing. Remember that term? You saw that years ago. That'll come back. Then the energy sector. Is this going to be a base for higher prices? I think so. Does it have to go now? No. But I think you're looking at a base. I'll be very wrong and tell you I am if you get back under this low. Until that occurs, I think the market is building momentum to the upside. Next target, 77 on this, if it can get itself up and going. Gold was a stellar performer today. Until today's low of 159.51 is taken out, I expect on pullbacks, the pros are going to buy and nibble. Each time they've done it, they admit they have been disappointed. This chart is better looking than the futures, but that's what I think they're going to do. Target wherever the Bollinger Band comes in. GDX, you lost the embedded reading. You don't want to be short anymore. That's one of the reasons I'm friendly to gold. Copper, still to the upside, outside day up. Could be headed right into here, the upper Bollinger Band, 29.95. AGG, nah. This is, to me, a classic get out a long time. I'm probably dead wrong, but that's what I would be telling my client. UUP, the dollar, certainly acted terrible today. So until today's high's taken out again, I think you got to be careful. Do you go short? Look at how oversold you are. You go short. I want no part of it. If it goes down, wonderful. There's no reason to be long, but I have plenty of reason not to be playing the short side. So I step back 1, 2, 3. And in FXE, it's an attempt at the upside. It's an outside day up. If you take out today's low, I think you're going right back to wherever the Bollinger Band is. You cannot take out that. You can't take out the dollar high, and you can't take out the FXE low. If you do, they flip-flop on you. So be very, very careful what you have here. And I do want to remind you, one of the things I like to do is offer you my research from time to time. I charge for this, not this one. If you'd like a week sample of it, I want to give it to you. All you got to do is go to our website and sign up for it. You'll be able to see what I write. And tonight's writing's big. I spent a lot of time in writing tonight about the Fed, what I see, the points of view that I have. They're in more depth than I'm offering you right here. I've got some trade recommendations. I write them out, tell you what I'm seeing, and then I back them up with the videos in the morning that you get to see. And on the weekend, the bigger picture, you get the weekly videos for all of it. So what do you have to lose? Nothing. You take your cursor, point it, moved it right up to the top of this, give it a click on the icon. It'll take you into my free offers. And from the free offers, just choose this one. you can choose the other stuff that we have as well. I think you'll find it pretty interesting and how it works. Twice daily updates, Monday through Thursday, Friday morning, and then a Sunday night update. Again, free for a trial to you. You can call my staff, you can go to our website, or you can take your cursor, point it right up there, and take care of it that way. I'm Ira Epstein. Thanks for listening with the cough, and I'll talk to you tomorrow.